Well, again, good afternoon, everyone. People who just joined in. Thank you for taking our time this Thursday afternoon. We'll be covering one of the important topics which we look forward to educate and inform our customers. The topic is about inside Bangalore's office market supply and demand. This presentation is actually made in view to the upcoming properties will be either in Mumbai, Bangalore, Pune. So we are covering the Bangalore particularly today, and we're looking forward to do further in the future for other cities. I have with me Sarthak Dhingra, who is the Senior Vice President at HBITS. He's been with us for a couple of years, and it comes with an immense introduction, which I'll just follow it after this particular slide. Well, to start off with, let me just talk about the leadership team. Mr. Shiv Parekh, who's the founder and CEO, is an MBA from Harvard and undergrad from Stanford. He's Forbes Asia 30 under 30 2022, Business World Disrupt 30 under 20, 30 under 30 2022. Just to let you know, this company, which is HBITS, he's a second time entrepreneur. He started a co working space before this, and he's been a vision towards this particular standing. With us as well, Mr. Co founder and CFO, Mr. Sameer Bhandari, who is basically an IIM Ahmedabad and a chartered accountant. He overall 30 plus years of experience. He's worked with banks like JP Morgan, Ma- Nomura, and worked at different locations as managing director. To move to another slide, talking about Sarthak. Uh, Overall 8 years experience in KPMG, US. He's instrumental enough to do some great projects back in KPMG. He was head of real estate, asset management, and travel center, which is basically Fortune 500, now, of course, BP portfolio. He's an MBA from ISB, a Master's in Architecture from Georgia Institute of Technology, and Bachelor of Science from Georgia Institute of Technology as well. A bit about introduction about myself. My name is Abhimanyu Arora. Overall, 25 years of experience, worked with banks like HDFC, HSBC, DBS, Singapore, and Kotak, and dealt in different departments, always into wealth management, treasury, and forex. One of the first people to join in this organization. Graduate from Graduate from Mumbai University. I'm sorry, I was having a bit of cold. Uh, Foreign trade certification from Mumbai University, and corporate finance I did from IIM Calcutta. Well, we'll just to let you know what we'll be doing in this presentation. We'll just cover around couple of slides about SM REIT for our new people who's joined in, and a bit about the comparisons between different asset class products. And then I'll just call in Sarthak to talk about 8 or 9 slides on basically on the Bangalore market, and then we'll start with our Q&A. We'll just finish another maximum 10 minutes from now. So just to talk about what is an SM REIT and how is it different from a REIT. SM REIT, as the name says, small and medium real estate investment trust. The difference between REIT and SM REIT is basically a REIT is basically starting from 500 crores plus. SM REIT, since it's called small and micro, it's between 50 to 500 crores. Well, both of them are SEBI approved investment vehicle. Uh, Focus on premium lease commercial assets, that is SM REIT. And REITs, basically, because it is mentioned away, how is it different from a traditional REIT? Is basically in REITs, you can do under construction, you talk about ready properties, residential. So there is a different mix of products over there. But over here, we focus only on premium lease commercial assets. It's a professionally managed SPV, asset specific investment. We talk about one asset, and that's how the investment goes. And there is no related party transaction in SMV. Whereas in REITs, a related party transaction is allowed. A bit comparison between the products. Uh, so major points we have covered as a comparison. If you look at SM REIT, FDs, bonds, and debt mutual funds, average deals in SMEs, you can see it is like a 8% paid out quarterly. Over here, I'm talking about approximately rental tax free, which if I put in the taxation part, it'll be like a 10% payout. With capital appreciation, it comes to around 14 to 17% IRR. FDs around 6 to 7%, bonds 7 to 8%, debt mutual funds around 6 to 9%. On liquidity, everyone, if in the particular vertical, are all moderate to higher. Taxation, of course, talk about SMD, which I just mentioned, it is rental is tax free. FDs are fully taxable as per your income tax slab. Bonds tax based as on your type, and of course, debt mutual funds is basically on short term capital gain tax or a long term capital gain, looking at the tenure you park in. Regulated, all are regulated either under a SEBI, RBI, particular better. Market risk, low, very low, moderate, and moderate to high. That's how it goes, specifically to the asset class. Investment amount for SM REITs minimum is around 10 lakhs. Uh, FDs can start with 1,000. I've seen few cases recently where you can start with even 500. Bonds with 10,000 and debt mutual funds with around 500. Transparency, if I talk about almost in each and everything, they're all high due diligence and audits in SM REITs, medium FDs, so, but it's very clear information over there as well. Uh, it depends on the issuer as per the bond. That's the place where you actually need to look in and actually find the credibility of the bond. And for the debt mutual fund, it is NAV based. Now, I'll just call in Sarthak, who can just take us through the Bangalore market. First of all, thank you, Sarthak, for joining us. I know for last 2, 3 months, and I should say last 6 months, there's been a lot of pressure from us, and we see a lot of great results coming in. First of all, just as well wanted to wish, I hope in Mumbai everyone has casted their vote, and we're doing it so that a lot of people have joined in. So, Sarthak, there are a lot of people over here who like to listen to you. Over to you,
Oh,
Sarthak.
great. Yeah. So, thanks for the introduction. So, just quickly, it's been another year of record-breaking performance. And Bangalore, of course, as we're talking about today, is the largest overall office market in India with some of the most stock of Grade A office buildings. And we talk about some of the different micro markets, but overall, the leasing activity has been at an all-time high. 2024 was a breakout performance, and 2025 has also been at those levels. And a lot of more trends coming in of global capability centers, where we are seeing really heavy demand. And this, despite concerns from tariffs and other things that has been there in the overall macroeconomic environment, we are seeing continuous demand from global capability centers. So that's very positive for the overall market. And as we see, vacancies now come down to about 8%, which is extremely strong. Sub 10% is considered very healthy. So we are seeing this, now at 8%, and some sub markets it might actually be much lower, like 2%, 3%, which we'll see. And one interesting statistic, which is a new sort of trend, is that in the last year we had 82% of the total demand from fresh leasing. This means basically that we are seeing, rather than continuous renewals, we are seeing a lot of new take up of spaces. And what's actually happening is that people are expanding. So that's a very healthy sign for the overall commercial office market. So more expansion leads to a stronger overall demand and lower vacancy, which is exemplified in all the statistics here. And yeah, just a quick couple of stats. Gross leasing volume at 7.6 million square feet in Q4, roughly annual performance of 22 million square feet for the Bangalore market. And we're seeing net absorption on annual basis also of 14.4 million square feet, which is higher than the 2024 statistics. So extremely strong market, and total demand has actually increased about 20% plus year on year basis in terms of the net absorption. So yeah, I think this is a very helpful statistic. If we take a look back, how much the commercial market has grown. We were in 2021 and 2022 at about 6 and 11 million square feet, and for Bangalore alone. And today that is hovering around 14 million square feet. For 2026, let's see, there is a lot of new pre-commitments that are taking up. So people are starting to have a preference for newer assets, grade A assets. So the supply will take some time for that to catch up. There aren't always a readily available stock, especially for large take up of spaces. Because nowadays, today, with your global capability centers, your average size for any company becomes about 200,000 square feet, 300,000 square feet. So these kind of large spaces. So we are seeing that there are a lot of forward commitments happening now. So a building that is just getting construct or starting construction may already have pre-lease commitments. We're seeing this happening all across, especially a lot in Bombay as well as Bangalore. And yeah, so another helpful statistic here: global KPP centers are 53% of the total demand, and that's just in Q4 of 2025. So that sort of momentum should continue. Recently, in fact, Brookfield has committed a 1 billion investment in for a global KPP center, which is going to be taken up by JP Morgan. That's in Mumbai, but that amount of investment is basically a positive momentum and confidence booster for the entire market as well. And in terms of the type of companies, we're also seeing a lot of increase from your flex operators, which are managed office essentially. And we have seen more and more of this happening where people prefer to take up space from a managed office provider, and then so they don't have to worry about doing the fit outs and managing that entire process. It's sort of turnkey, just plug and play sort of potential options that are coming up. And yeah, so just quick overview here so that we get a little bit sense of where things are happening. CBD of Bangalore, where we actually do have investments in the past as well. Current rates on average maybe 162 rupees per square foot, but we are seeing this can be for grade A, very high demand buildings can even be running at about 230, 250 rupees per square foot these days. So outer ring road is your largest office micro market. That one is would have been at about 90 bucks maybe just a year or so ago, and that's currently come to 105. So we're seeing good year on year increments as well. And completely new sub markets are coming up like Whitefield, where that would be under Peripheral East around that's 73 rupees per square foot. That was maybe 2 years ago at 50 rupees. You can see how much that has increased. There's almost been a 50% increase over the last 2 years. So that's really good, healthy momentum for the entire sort of market. Bangalore has consistently performed extremely well. And so when we look at new acquisitions, for us, we are eagerly looking at things like the CBD, Outer Ring Road, Whitefield, such markets where you have continuous demand. So there's a very good, stable investment where we can be sure the tenants will be always looking for that kind of space in those areas. So this is, as I mentioned, so again, Outer Ring Road, really big market. Peripheral East is the Whitefield corridor. That's where new developments are coming in, which is your grade A, high quality supply. So these markets are really good for us to be also looking at from investment perspective. Just a few major transactions that have happened. Swiggy, really large take up of space, stable space, which is one of the managed providers. So they usually have sub tenants, etc., which are also taking up a lot of space with them. A large transaction from Disney. This is in Outer Ring Road market, and then you have Nike as well. So really good take up. I think this draws a little attention to what I was mentioning earlier. People are now taking up really large amounts of space, 200,000 square feet, etc. So that's really good confidence boosting for the overall market.
Well, thank you, Sarthak. I guess we'll just jump into Q&A. Before that, just I have a quick question for you.
Yeah,
Uh, as you just mentioned, now the market is moving and there are a lot of service providers, or it's going to be more like a plug and play. You know,
right.
how would that affect in the rentals? And
So
how do you see that
yeah.
market shaping up? Because that's as well one of the risks, because the capital is not borne by the person who is a taker. You know, how do you see that?
So I think what we are seeing is that usually when a managed office provider comes in, they are taking they for them to put that investment, they really need to look at a 10-year minimum viability period, right? So when they look at that, what we are saying sometimes even if a typical lease would be 5 years with a 3-year lock-in, The sub-leads that that say Table Space or SmartWorks may have with the end user, those can be even 10 years from the get-go. We are seeing a lot of these kind of long-term commitments. So that's good for both, because we as a landlord also then have clarity that even after my 5 years, the end user is going to already be there. So there'll be a almost guaranteed renewal of that particular lease. So that's positive. And I think what we get as the landlord would be fixed. They, of course, bake in the cost of the fit outs on top of that. That's why they have to look at that 10-year period.
Sure. So, I'll just request customers to just, sorry, investors and people who are present on this forum to just put in their Q&A. Well, Sathak, I'll just pull you in whenever there is a
Sure.
market requirement kind of thing. So, first question is from Mr. Naveen Rego. Taxation of receipts from your REIT. Well, Mr. Rego, just to give you an explanation a bit about how this works. Uh, First of all, our taxation past partner is ENY, that's Ernst and Young, and you can reach out to your wealth manager at HBITS, or you can write to me, and I can share the ENY taxation note with you, which explains in detail. However, for a better understanding for everyone over here, I'd just like to detail a bit of how it works. So we are working on a basis that the money which we just talked about, mentioned as 8% paid out quarterly, that comes to you as a return of capital. Please let me just correct myself. It's return of capital and not return on capital. It's return of capital, which particularly means that I'm returning the capital which you have paid me. So let's say 8%. I return you back that 8 rupees every year for, let's say, for 5 years. That means 40 rupees is paid out to you. Okay. That means it is tax free. 100 rupees which you parked in has become 60 because I deduct 40 rupees is given back to you. After 5 years, if I sell the property at 150, so 150 minus 60, which was your capital, approximately 90 rupees. On that money, you'll be paying the LTCG, which is 12.5%. Well, on a maths, so that's 12.5% for you on that particular amount. Just if I did a particular maths, if you pay taxation now, and as per our current structure, which is proposed, there is a good different rupees of 9 rupees on an investment of 100 rupees. So it's a 9% more efficient in terms of tax section. So that's how we came to this proposition. Mr. Pradeep Kumar, how to invest in SM REITs? Well, you can reach out to a wealth manager. It will be done through your DMAT account. That's the answer. And we can let you know on the process as in detail. Mr. Mohammed Faisal Dakli, by when is HBITS planning to launch their SM REITs? Well, a good portion is that now I'm aware that how it will be done. We're looking forward that it will be done in March as well as in April, and I guess it will be as well done in May. So we look forward to see a lot of assets coming in the near future. But to talk about it, yes, the first one will come in March. That's what we're looking at. Uh, Mr. Dilip Gundela, I guess this is a question for you, Sarthak. How do you view the trend of companies setting their own campus like Amazon in North Bangalore versus leasing office space from a builder? Will this trend reduce the demand?
Sure. So actually, this trend is more so part of that global capability center sort of story, right? And in this case of the Amazon one in North Bangalore, it would a lot of these because they're such large campuses, they will usually have a commitment with the builder. So it's almost like a sort of they're already committing to a full campus, and then the builder usually develops that, and then they continue to take it on lease versus actually buying the building themselves. That being said, in fact, nowadays I think the trend is more that even people that did own office, they're doing sale, leaseback, etc., so that they can keep their balance sheet asset light and focus on core business. So it actually creates better quality assets in the market at the moment. And so even if they have a new campus built up today, possibly 3 years down the line, 4 years down the line, that may come to the market for potential opportunities where experts may be able to say invest, and that gives access to sort of retail investors to be able to have the opportunity to invest in those kind of quality assets. So we're seeing it actually increase the sort of activity in the marketplace, which is a good sign.
Great. So there's a question from Chinchana Kove. What are the current investment opportunities and exits? So at this moment, we are looking forward for the first IPO, but you can reach out to our wealth managers because we see that erstwhile in fractional ownership, there might be investment opportunities coming up in the month of February mid. So you can reach out to them right away. Mr. Dilip Gundala, when will HBITS launch their first assembly? As I mentioned, it will be in March. That's what we look at. Uh, Following question by Mr. Gundala. Please say that Andhra Pradesh with Vizag and Amravati will lead the office space leading. So that's question for you,
Yeah,
Sarthak.
sure.
Please say that state maybe that Andhra Pradesh with Vizag and Amravati will lead the office space leasing in India in the next 3 to 5 years. What is your view on this, and how does this compare with growth in Bangalore?
Sure. So yeah, I'll summarize and rather just say whether it's metros versus non-metros, and we're certainly seeing a lot more growth happening in non-metros because there's a cost of living is lower. So educated people nowadays, large campuses can be set up because they can afford to pay a more competitive salary. So we're seeing definitely that growth happening. That being said, as the data also presents, it is not there is no risk or any sort of slowdown in growth in your core metros like Bangalore, Bombay, etc. because there is so much further demand still. So right now we don't see this potentially having any impact in the near term. That being said, we will also start looking at non-metros more from a investment lens on the edge bit side, possibly after we do the first 2, 3 assets, which we should expect to do in the next 6 months or so. Then we can start looking at other markets as well.
Thank you. Question from Mr. Prasad NN. Is there a minimum amount of investment? Yes, that is there. That is 10 lakhs, Mr. Prasad. Question from Atiba Khan, so our existing investor. What are the potential micro markets that you are focusing on Bangalore in the next investment? Any opportunities in North Bangalore? Sarthak?
Sure. So at the moment, the North Bangalore stretch, especially towards the airport, is still developing, and we're seeing large campuses, etc., type of developments come there. But for what we're looking at right now, I would say our investments would be more looking at like a CBD market, outer ring road market, Whitefield market, where these are the sort of already tested micro markets where there's a lot of demand. So for us coming in, you want to have an investment where there is always high demand from a micro market perspective, so that your risk is less if the tenant does vacate. That being said, I think the other corridors are also developing. I think after 3 years or so, maybe we'll start to see other opportunities, more material sort of forming opportunities there as well.
Thank you. Question from Mr. Sunil Kumar KS. How is the liquidity if I want to exit after 1 or 2 years due to some emergency or other commitments? Can we get easy sell off the fund? Yes, you can. First of all, there is no lock in period for you. You can choose to exit from the particular investment by selling it out through by putting a sell option either on a BSE NSE where this particular fund will be listed. So I hope that answers the question. A question from Mr. Umesh Kumar. Will the Bangalore commercial retail space be challenged by Vizag in the very near future? Satak?
Yeah, no. So I think we may have touched on this a little bit, but at the moment, given the amount of demand, and Bangalore is the largest office market in India, there are always mandates floating for large take up of space. So we certainly don't see any potential risk to Bangalore as a core market. Rather, as we continue to develop the way India's sort of growth has been, and we see more and more tier two cities also get some office sort of developments more so. So I think that will certainly contribute to Vizag and other such cities' growth stories. But any large organization that comes into India, they will always have to maintain a core presence in your metros like a Bangalore or Mumbai, etc. Whereas they might start having secondary campuses in tier two cities. So it will indicate that both type of cities will continue to still develop.
Yet. Question from Mr. Prasad NN. Are SM REITs monitored by SEBI? Yes. It's a SEBI regulated product, and we have got a SEBI license, SM REIT license from SEBI on 1st of April 2025. Question from Srinivaslu Kuragaela. Sorry if I pronounced it wrong. Uh, Hi, I have a very little idea on SM REITs. Can you throw some light on lock-in period, exit policy, extra? Well, just to let you know, Mr. That's a big topic to talk on, but pertaining to the question which you put in, first of all, there is no lock-in period for you, and the exit policy is very simple. You can go to the particular framework of BSC or NSC, and you can just exit. As well, just to mention, we deal only and only into pre-leased commercial properties. That means the property is ready, OC is received, and tenant is already there. That means you start getting investment returns from day one. However, we have mentioned about 8% quarterly, so whatever the money will be coming in will be coming to you on a quarterly basis. Mr. Arjun Sachdeva, is there any option to buy them at current stage or wait for listing to for free? So we have to wait for the listings, sir. But you can reach out to a wealth manager so that we can duly inform you in advance whatever is it. Mr. Arun Sachdeva, is there any AI PMS opportunity? Well, we are as well looking at a AI opportunity at this moment, but that will be coming in the month of July. Mr. Dunit Ganana, I have observed that the listing SMEs have not appreciated in value. How they are hovering near the IPO price, and the first assemblies is below IPO 10 price of 10.5 lakhs. Do you feel due to the ticket size the price is not rising? No, sir. Just to give you an understanding on this, just one second. I'm sorry for that. Okay, just to give you a bit understanding how SM REITs function and why. First of all, why is an SM REIT bought? The reach and objective of SM REIT is to earn passive income into the account, which is account quarterly. And second is that if you're looking forward for this particular option, you please choose to invest for a 3 to 5 year horizon. The NAVs will not change in the SM REIT section. How it will change? Every year, we have to submit the valuation report to the BSC or NSC, wherever it is listed. And that's how the NAV will change because the appreciated value kicks in over there. The current market, which you're talking about, wherein there's one SM REIT listed and it is just going up and down a ticker by between 9.8 to 10.2, something like that, is just because of the market economics. But that is just playing due to demand and supply, and it will remain the same throughout the year.
So I can add some one
Yeah,
point
please.
here. What is happening is like typically in real estate, you have your year-on-year escalations, right, of the contracted rentals. So in the SM REIT so far, it's just been about a year or so that we've had any SM REITs out there. And for example, the first one did not have any year-on-year escalation until the after the third year. So I think there will be a factor of that as well. Once the rent actually appreciates, simultaneously your value should also go up. But of course, you should look at a 5 year, 3 to 5 year horizon when investing in these products.
Right. But I guess, the NAVs probably would change by, is it correct, Sarthak, right? We have to submit the evaluation report every year.
Yeah, we do have
So,
to, of course, yes. And
perfect.
that will also take into account whether the rent has gone up or not. So it will
Correct.
just vary depending on the investment. Yeah.
Perfect. So next question is, yeah, Mr. Prasad Anand, what is a general average CAGR returns over last 1, 2, 3, 4, and 5 years? Talking about REITs as such, since it's going to SM REITs as such, it's going to be a first, so I can't say about CAGR, but if I talk about the current investment opportunities which we have had, we've done around two exits, in which one of the properties where we mentioned targeted IRR of 15.54, we delivered 17.54. That was done in 18 months. And second property, which we exited, which was in June 2025, the targeted IRR was 13.10, and we delivered 14.74. That was done in approximately 3 years and few months. Uh, Question from Mr. Dilip Gundala. What happens to office demand in Bangalore? If there is a shutdown in IT due to AI related downsizing of employee strength, we're already seeing drop in employee count for leading IT companies.
Y- Yeah, sure. So actually, what we are seeing right now so far is more impacting US and other such mature markets. In fact, in India, despite if we talk about the AI trend has now kicked in for 2 3 years, and a lot of the new demand that we are currently seeing is from global capability centers. So at the moment, what is happening is that there may be impact due to AI, etc., in the US for jobs. That being said, in India, it has not had any such impact at the moment. And we're also seeing more take up now from financial services companies, things like that. So certainly there could be minimal impact, but it's not material that is affecting our investments or any potential outlook moving forward.
Right. Mr. Umesh Kumar, will the recent tariff was war started by Trump have any impact on the GCC centrist being set up expansion in India as US may impose on the export of services from India?
Yeah, so I can take this.
Mhm.
It's unlikely that there could be any such impact because then the companies that would suffer are US companies if Trump were to enact such kind of tariff. So at the moment, whatever tariff sort of does get put out, it's usually it hurts Indian manufacturers. So the some kind of tariff on export of services is very unlikely. And that being said, despite this interest rate and sorry, the tariff environment, we've seen so much space being taken up by GCCs in just Q4 of 2025, while all these tariff discussions were already ongoing. So now I think it will actually smoothen out. There was no impact, but now it should smoothen out as well, given that both sides are trying to work something out.
And I guess Sarthak, looking at the rupee value depreciated, if 20 years we should look at back at was around 58, now we are at 90, 91. For the US market or UK market, it's the same dollar or a pound they're paying for a square feet, I guess, with that particular.
Yeah. In fact, no, with the dollar depreciating, they get more bang for their buck. Sorry,
Correct.
with the rupee depreciating slightly. So even if the rents are going up, it's still a dollar for them for the rent.
Exactly.
Yeah.
It's like what 20 years back I'm paying the same
Yeah.
into some extent.
Possibly. Yeah.
So, and that is why maybe the other outside companies are parking money over here.
Yeah.
Well, the
So we are
next question
seeing
is
very
yes,
stable demand, correct?
yes. Uh, so I have last two questions over here. Chinchana Kuwe, who has asked, is 8% returns guaranteed? Well, this person number is as per the rental cash flows based on the rental agreement. While we file our DRHP with SEBI and when we share the prospectus with you at the time of investment, the 5 year cash flow will be mentioned over there and the risk associated over there will be mentioned as well. As this particular product goes for only one particular risk, which is basically what if the tenant leaves, right? Because the property is yours and the tenant is going to be there and the rent flows in. But at this moment, we are surely looking at this particular structure that to mitigate such risk, we are only looking out for big MNC companies as our tenants. We're looking at lock-in periods. We're looking at many more other ideas. It should be a stable market. As Sarthak mentioned, we're looking at a CBD, other location because those markets are matured and people are over there from ages and they're going to stick to that particular location for ages. Talking about another question, which is basically the last question, Mr. Naveen D, how to reach wealth manager? Well, so you can log into hbits.co and you can reach on the board line number. The moment you dial the board line number over there, it will reach out to any of us. If there's any questions pertaining for anyone in regards to uh, having the ENY taxation note and everything, you can write to me. You can see the name on the screen. It says ABIMAANYO at the rate hbits.co. I can share the wealth manager name, or you can directly dial and your phone will be picked up by your wealth manager itself. Well, one more question just came in, so we'll just look at that. Mr. Srinivas Kapaganti, what is your advice on further future investments with Edgewit's existing investors? Well, sir, at this moment, till now, we were doing fractional ownership, and this was basically unregulated, but they've been playing good returns. As the market research for acquisitions have been the same for fractional ownership and has been the same for SMEs, which is coming. So for the new investors, or I should say for SMEs, one should surely go to have three particular options which have become better. Uh, if I look at the erstwhile and now, the three differences will be earlier it was unregulated, now it is going to be regulated. Earlier there was a what you call is a liquidity option is you have if you want to exit you can come to me and I used to give an exit like 30-40 days. Over here in SM REITs in terms of liquidity you can just put your sell option on the any of the particular BSC or NSE wherever it is listed. And third is better taxation, where I used to get called from a lot of HNI investors and they used to mention uh, give us a particular product where the taxation is low. So this is a proposed better into taxation. So that's what I'll say. Is there any investment in Hyderabad? Question for you, Sarthak. Are we looking at the question is for you
Yeah.
is there any opportunity coming up in Hyderabad?
Yeah, so we're looking at some assets there. Nothing is like confirmed yet, but of course we keep evaluating in Hyderabad as well.
Great, because I see a lot of supply coming in Hyderabad. Uh,
Yeah, a lot of GCC and other such demand there as well. And of course, the CBD of Hyderabad has also very low vacancy and very difficult to get new opportunities to develop land over there. And then other markets are also developing pretty well, like Gachibowli and those areas where large take-ups are coming.
I see there's a huge Apple campus and an Amazon campus over there as well.
Yeah, right, right.
Right. Oh, another question. I'm just waiting for more questions to come in actually, so that all are answered. What about Pune market? Yes, Pune market, Sarthak.
Yeah, Pune actually is doing well, but there's more supply coming up there. We've already done investments in the past in Pune, so a lot of new assets are being looked at over there as well. In Pune, we see a lot of trend for your flex operators, where they take up full buildings before they are ready. So those kind of opportunities will certainly come, which will be the type of ticket size we're looking at. So we may have something in Pune in due course. Of course, we are always looking there as well.
Great. Well, thank you, Sarthak, for coming in and giving us this
Sure,
entire preview about the Bangalore market, and looking forward to capture and talk about other markets in near coming webinars. Uh,
sure.
for everyone over here, thank you again very much for joining us this Thursday afternoon, where we covered the Bangalore office market. If there is any as kind of a question, and yes, I see one question coming in, which I'll just answer. So, if there is any kind of a view that you want to look at this particular presentation again, you can go to the YouTube channel of HBits, or you can just go to hbits.co. There will be a link which will be provided towards YouTube. You can actually look at all the webinars possible over there. In addition to that, please subscribe to our WhatsApp channel, which gives you immediate updates about each and everything running in the organization. And please have a look at LinkedIn as well. While we look at the last question, Mr. Umesh Kumar, typically what is the profile of the customers taking up the space? Is it dominated by software slash IT, or we have other industries like financial services, pharma, etc.?
So, sure. I think it depends here basically on where it is. In places like Mumbai, of course, we see more financial services. In Hyderabad, there'll be more pharma potentially. That being said, of course, all operators are there everywhere. But we're seeing today that there's a good mix of financial services and IT companies as well in majority of the tenants that you see, with a lot of the trend going towards the flex operators today, like table space, etc., which are also taking up 25% of the overall market, I would say. Um,
Right.
so I actually just add, because you mentioned Abhimanyu, that we will be uploading this. So just wanted to also mention that, of course, this data, we look at data from different international property consultants. And so for this current webinar, we've of course looked at Cushman and Wakefield's data, because they publish every quarter these reports online. So if you're curious, you can of course Google these reports as well, ongoing basis whenever you feel like.
Uh, that's a good idea. So, if I look at the particular current uh, tenants which we have Gupshup Technologies, which is like a tech based. We have ICICI, which is like a finance based. We have Foundever. We did 2 units for them, which was earlier Cytel, which is a tech based. We have ICICI and IIFL, both are financial based. In Bangalore, we have Smith with table space. So that is more security based, security in line because that is an R&D center. Uh, Again, there are many more projects, but as well to talk about in Pune, we have Microsoft. So yes, it is surely skewed towards that. But idea for us is, of course, where you see a right property with the right ROI and the contract is right, and that's a product we want to give you. It shows that yes, it is skewed towards tech, which maybe it's right, but I we at this particular purpose is that we look at both the aspects. Well, thank you everyone, and thank you Sarthak again for
Sure, sure.
no, sir, there is no project anyone right now at the end. So I'll just say thank you last time. Thank you everyone in this Thursday afternoon. Looking forward to seeing the upcoming webinars. Please log into hbits.co and please visit our LinkedIn. And if you want to reach out, you can reach out to me at my email ID, that is abhimanyu at hbits.co. Thank you. Have a
Yeah,
great day.
thank you.
Thanks.
Thanks. Bye.
Bye.